Welcome back to another Calgary real estate market update with us here at Redline Real Estate Group. Today I'm going to be talking about the data and the numbers that came out from our month of May. When reviewing all of the data that was released by our Calgary Real Estate Board for the month of May, the numbers as a whole, they don't show very well. The impact on COVID-19 to our real estate and our housing market has been extreme, very similar to the entire economy. However, as I've been mentioning over the last two updates, just looking at the total monthly stat summary isn't the full picture. Today, I'm gonna give you the high-level numbers such as this, but then I'm also gonna go a little bit deeper to tell you the real story that's trending as we started May and now when I'm recording this have started to emerge in early June. In this video, I'm gonna provide you insights on three major topics: the sales summary, the inventory story, and of course our pricing picture. And then I will be providing my advice to sellers, to buyers, and investors. Those three segments will be on the back half of the video. All right, so let's get after it, shall we? All right, let's first go into the sales summary. Total sales for the month of May have fallen 44% in relation to where they were last year. Big number. The worst hit market was our apartment. It fell 56% in relation to last year's total sales. And then the best performing market was our detached at a minus 35. As scary as those numbers may sound, this has been a significant rebound from where we came from in the month of April. But despite that, we are still a long ways away from our seasonal norms. This is where I'll end now with the macro trends released from our real estate board surrounding sales, and turn my attention to some specific detailed analysis that I performed to give you the real story and the true trends about our picture as we finish the month of May. The month of May was a tale of two different markets. Where we started and where we ended had a completely different economic scenario surrounding it. So all of the sales numbers reported from the first 2 weeks of May were part of the sales that got written pen to paper at the very end of April. If you can remember, on April 30th, that's when our Premier Jason Kenney announced the first conversation around our economic reopening. So all of the deals being written and the activity performed by buyers and sellers before that announcement were done under different pretenses than things to come. As a result, all of the sales recorded in those first couple weeks of May were from the activities and the contracts written in the later part of April. So it's safe to say that the first couple weeks showed very, very slow activity, but then the balance of May saw an incredible rebound and a recovery had really started to happen. Even though the reopening wasn't scheduled to the middle of May, what we did see, the can had been opened up. New optimism and regained optimism was hitting our market. I'm going to show you a few graphs that I put together to show you this story. This first graph that I'm showing you right here, it shows it plainly. You can see early on the May sales numbers day by day were very slow. And then you can see the trajectory change for the back half of the month to a much more palatable and optimistic figure. Okay, this second graph that I'm going to show you right here, this one's a little different, still pertaining to sales. What I've done with this graph is it shows the whole week as a whole, all compiled to one. And then I'm cross-referencing it with last year. As you can see at the beginning of May, we were about 55% off of the sales pace on a given week than we were the year before. But then as we end at the very end of the graph, you see we've really closed that gap to a point of minus 25%. It doesn't take a rocket scientist to know that this has been a significant shift, all within one given month. So as we look to educate ourselves as realtors and provide you, clients and consumers alike, an appropriate message about the market, this is why I don't stay with just the macro figures. I look much deeper to tell you the real story happening kind of under the surface of those big numbers. Okay, if we're gonna be talking about sales, I can't close this chapter yet unless I tell you about the leading indicators that drive sales. And that's pending deals, as well as the showing activity that's happening out there on the ground. When we talk about showings, At the beginning, as you look at this graph here, you'll see how far off, how low our numbers in 2020 were looking in relation to 2019. We were really off the pace. But then you can see this graph continue to get closer and closer and closer to where we ended at the end of May. Our showing trackers were only 15% off of the market we should be in and we were hoping to experience before all of this happened. An increase in showings means an increased amount of optimism and confidence in the market. When I talk about pending deals being a leading indicator, pending means a deal where a buyer and a seller have gotten into a new contract. A conditional period for a contract is typically 10 to 14 days. So when we see pending deals growing, as that number grows, it's an indication of the future pace of sales we hope to be reported. Again, with this graph that I'm showing you right here, at the beginning of May, we were a long ways off, 45% off of the numbers from last year. But then as this graph trends and trends and trends, you see by the end of the month, we were as close as 7% off of last year's numbers. Again, needless to say, that will create future improved numbers that we have yet to report on here at the beginning of June when I'm recording this video. In this second graph that I built, it also shows the pendings in a different format. At the beginning of the month, we were down around a number of 40 homes per day under a pending situation. By the end of the month, we were over 90. That's a significant increase. I don't know if we even expected our numbers to get that close to where we were last year. I'm gonna say if we were within 10 to 15% of last year's numbers, under the situation and the pandemic and the economic constraints, that has to feel like a win for us as greater Calgarians. Okay, now let's discuss the inventory story. As I was discussing in last month's update, we've been having a significant shift in our inventory picture. What I mean by that is both the active inventory count as a whole and the new listings to market have significantly dropped in relation to this time of the year. We ended up finishing off May with 5,813 homes on the market. What does that mean to you? Well, it's 22% off of last year's number, equating to 1,650 properties, give or take. COVID has been our reset button on inventory. Typically in May, we would be seeing 110 to 115 new homes coming on the market, but when I average out May, it was only 80. Now, unlike the sales summary, the month of May for inventory wasn't a tale of two markets. It was very consistent for most of the way through. As I'm showing with this first graph, you can see the daily growth, day in, and the ebbs and the flows of new listings coming to market. For the first 3 quarters of the month, that curvature is pretty much the same. But if you look a little closer at the very end, that last quarter of the month, that's where we saw things adjust a little bit and where the number of new listings coming to the market grew for the first time all month. On this second graph, this represents total active inventory. The top line shows last year's total and the bottom line shows our 2020. What do you see? Well, yeah, it's a very flat line across the whole month. Our total active inventory didn't go up, didn't go down throughout the whole month of May. Okay, now I've brought a third graph just to speak to you about inventory. And this graph shows the real trend that's starting to emerge. This chart aggregates all the new listings over a given week and then compares it to last year. In the early parts of May, we saw that we were off by about 30%. But as I record this on June 5th, we are already surpassed new listings coming to market than the same period last year. So we've gone from falling behind by 30 to slightly above right here, right now. I've talked about shifts already in this video, but this is the most significant one. My hope when I think of our home prices is that this spike doesn't become a prolonged effort throughout the month of June and July to come. If we see this much new inventory continuing to come week over week over week for a little while, we will quickly catch up to last year's total inventory numbers, which would not be a good thing for us when our sales are still significantly down. But this is just a recent trend starting to emerge, so time will tell. Okay, so after all this, let's get into the pricing picture. When we talk about prices, we talk about two different things. One is how are we doing month to month but also how are we doing this month in relation to where we were at this time last year. So let's get real. The fear out there, when you're listening and reading the headlines, there is a lot of talk about a downward pressure in falling housing prices. With all we're going through as an economy, it's pretty expected to think that our housing pricing is getting affected too. Again, as I'm shooting this video, some of the headlines by RBC, by CMHC talk about tightening the lending guidelines to get new mortgages and double-digit pricing adjustments that are going to come from the fallout of all the financial impact that we're all getting hit with right now and coming into the future. So let's hit up the facts. Looking at the month-over-month figures, we ended April with an average benchmark price of $415,800. Now, when we look at the end of May, this translated down to $411,600. So that adjustment was just under $5,000. But let me give you a little more context. January's number was about $415. February's number was about $415. March's number was about $417. So when I take all of this together, and I look at the quarter before and the situation we're at now, we've adjusted down as a city by about 5,000 throughout the COVID pandemic. With all that's hit us, I would venture to say that's not that significant. Now, how about year over year? From May 2019 to the end of May now, we are down by minus 2.67%. Again, not overly that significant. Now, a dollar is a dollar. Dollar lost is a dollar lost. I get it. But again, with all that's come our way, we could, and probably should, be a lot worse. Okay, those are the three biggies: the sales summary, the inventory story, and the pricing picture. Now I'm gonna roll forward into those three other segments: the advice for buyers, the advice for sellers, and those investors as well. Okay, my advice for the buyers out there. The quick message that I have for you is that the market may take you by surprise. I think it's fair to say that we wouldn't have expected, under a global pandemic, a global economic shutdown, that as a result of all of this, that there would be much pressure placed on us as buyers if we're out there trying to find that next home. But the fact of the matter is, there actually is right now. While our inventory still remains about 1,650 less homes on the market than we had last year, and couple that with the pent-up demand for many people staying on pause, what we're seeing is a fair amount of multiple offers and homes being sold in short days on market. I know, it's not what I expected either, but it is happening for those homes put on the market with good value and being priced fair. An overpriced home, it's still an overpriced home. There is no reason under our situation to pay more than you need to. But that well-priced home hitting the market now, it's selling very quickly. The high end of the market, the luxury side of the market, the biggest deals to be had are still in that bracket. But the middle part of the market, we're seeing that the sale price to list price ratio is only coming off between 3.5% right now. Okay, the advice now for sellers. Last month in our market update, I predicted a pinch in inventory that was going to happen with some pent-up demand about to hit the market. And I will whisper out this term that we haven't used for a while, seller's market. In the later part of May, this did start to unfold. And as a result, many sellers, hopeful sellers, ended up with a very positive and unexpected result. But I'm here to say, and on June 5th, when I'm recording this isn't going to last long. What I've already started to see is a significant shift in that rebound of new inventory, which will close that opportunity for sellers really quick. I believe right now is the best selling window we will have for the balance of the year. And I do believe it will be a shorter window than normal. To quantify this just a little bit, the average number of new listings between May 1st and May 21st to hit the market was 75 per day. But then in the last 10 days of May, that jumped all the way up to 95. And as I sit here today, yesterday, 135 new homes hit the market, a significant change. These rush of new properties, if sustained, will reshape the inventory story, and that reset button I talked about might get eroded just a little bit. Okay, now my advice for the investors out there. Well, like sharks around a bit of turbulent water, I know you as investors are swimming and trying to see if now is the time to go out and take a bite. While we've been circling, I've been answering questions such as this. Should I wait for that price drop? Can I scoop up that great deal right now? Aren't foreclosures starting to ramp up? We try to answer these questions for the investors. It's best to come back to a place of what is your motivation as a would-be investor. First of all, timing the market, which is something we all want to do and maximize, it's pretty tricky to do, isn't it? It's probably easier in real estate than with the stock market. But that being said, between all the reports coming out, there is a fair amount of conflicting information and a lot of crystal balls being placed in the air for us to consider. If you're a value buyer, somebody purchasing to renovate and to do a flip project, I believe that if you throw your dart out there now at a few sellers, it's very likely you're going to hit something that will make it so you can buy right. With the subsidies in mid-swing, but also the release for when they're going to end starting to come out, conversations with sellers that won't be able to continue with their payments are starting to be had, which means a lot of that inventory is starting to come to the market. So motivations are quite high. So with all that being considered, and then the one thing you as a flipper know, it's difficult to get max price during the winter months. This winter, because of everything happening, it could be worse than years before. So if you want to get into a great project, motivation is lining up with that now. And then if we look when the renovations would be completed and when that project would be hitting the market again, you'd want to get into something and start renovating it pretty soon so you don't left trying to put out your beautiful product at a difficult time to sell. Now, if you're not a flipper, but you're a cash flow buyer, pricing isn't always everything, is it? Oftentimes we discuss the entire health of the market, vacancy rates, and can we fill at pretty reasonable dollars to give you the cash flow you need based on your modeling. I can tell you our property management group, Greenleaf, is having incredible success right now because there are still a fair amount of people pausing on their buying decisions and remaining in the tenant pool. So my thoughts right now, if the right property hits on the market, and you've heard me saying that if it's priced well, it will go quick. For you, on your cash flow, if you had to pay $5,000, $10,000, maybe even $15,000 more than you'd like to, that won't change your cash flow situation very much. But where inventory sits in relation to how many we're normally used to looking at, if that home matches your model and what you like to purchase, it could be a while before another right fit comes to market. So maybe don't be scared to come and pay close to market price. So good luck and happy investing. Once again, that's it. If you've made it this far and you've gone through the whole video, thank you very much for your attention. I hope our analysis and our perspective on the numbers has given you something to think about while you're looking to make your home buying and selling decisions. I know I'd personally love to know your thoughts. I answer every single question that comes our way, so please feel to put your commentary down and I will get back to you. As always, don't forget to subscribe to our channel if you haven't. Put a like and a comment down so I can answer it, as well as if you want to be notified, hit that notification bell. Stay healthy, stay safe. Until next time.